Welcome back here with Money, 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 and we are looking at the starting off of a new financial year and all you need to do to set your financial life and your financial plan in order. And of course, I'm in conversation with Karthik Zaveri. Karthik, we've covered 3 points on your list. Right. Now we come to number 4 and number 5, which is a financial timetable as well as taxes, which is the scariest part, perhaps, of planning for those who don't have their house paid.
That's right.
So, what sort of timetable are you talking about here?
You know, what happens is we have a lot of liabilities and a lot of commitments that we tend to take on to life. You need to know when your insurance premiums are getting due. You need to know when you need to make your advance tax payments. If you are, into a situation where you earn extra money, you need to know when you need to pay your, service taxes and when you need to pay your TDSs, etc. So you need to do those things. You also need to know that, I have to do my tax savings at some point of time. You also need to know that, okay, this time my EMI is going to go and this time my SIPs are going to go and things like that are going to happen. Where is the income going to come in? Which bank account is going to happen in? So you just need to have a nice little log of it. And then, for example, Google today helps you in a very great way. So if you can synchronize this across all your devices, every device will keep popping up and reminding you on what you need to do. So if you can set up that entire 12-month schedule right in the beginning of the year, then that helps you enormously.
Now finally coming down to taxes. And again, here perhaps for salaried individuals, still easier because the company or your employer ends up deducting a lot of the tax that you have to pay up during the financial year.
That's right.
But other sources of income, stuff that we don't generally think about, especially at the start of the financial year.
Yes, and there are so many things that happen. Salaried being is one part of it. But for example, let's say the first thing is tax saving. So now instead of waiting till March to do a tax saving, a lot of times we suggest that, if you like a PPF, go and put your money into PPF into April, May itself. If you're a business person.
Why do that?
Because you earn interest for the whole year and your investment has happened that much faster than earlier. Same thing applies to an ELSS. Well, you may earn, you may not earn because ELSS is a market-linked thing. But if the market actually moves up in your favor and if the markets are down, which is the current situation right now, it would be a fantastic time. Come 1st April and go and make your full Section 80C investment into an ELSS. If you have that space in ELSS for that 1,50,000, just go ahead and do your tax planning in April itself. So, it also saves you the administrative hassle of worrying about it later on.
Sure.
But going beyond that, let's say everybody tends to invest in a property.
Yeah.
So if you've got a rental income, to pay advance tax is your responsibility. The company won't know that.
What are the deductions that you should keep in mind when you're looking at your rental income and then therefore figuring out how to make it tax efficient?
So when you're getting a rent, the first thing you're going to get is a standard deduction. You reduce the standard deduction from the rent, which is 30%. So if you're getting 100,000 rent, 30,000 goes away. Remaining 70,000 is added to your income. If you're on the 30% tax bracket, then you're going to pay 30% of 70,000, which is say 21,000. Now, out of that 21,000, you're supposed to pay about 15% of the tax in June itself.
Oh, okay.
And then you're supposed to pay another 45% of the total tax liability by September, 75% by December, and you need to pay 100% by March of 2017. Sure. So that's what you need to do, and that's how you need to plan. Okay, so now if you have a second home, for example, and whether it is rented or not rented, if it is rented out, then there is no problem because you're going to earn a rental income out of it. But because it's a second home, the EMI that you're paying and the interest component of that EMI, you are not restricted up to that 2 lakh interest deduction. You can take your if you're paying 5 lakhs as an interest, the entire interest could be offsetted from your income. You see, so you have that benefit, and if it is known as loss from the house property. So if your house property is not rented out, you have to calculate a deemed income, which is the fair market income that you would get if you were to rent that house, and then you can still take the exemption or a deduction of your entire interest payment within your EMI. So that's a huge amount of tax saving that you can actually do by doing this kind of an arrangement. So that is something that you might want to think about and project in April, May itself, so that you know what's going to happen for the rest of the year. You can very easily ask the lender to provide you the whole year's interest projection. What is the interest projection that is going to happen based on your EMIs? So that's something that you could do. Then let's say moving into capital gains. People who are buying and selling, say, mutual funds or let's say shares, if you're trading into something, you need to calculate your liability of capital gains on that based on the year in which you bought, apply the indexation. If you do not pay that tax on time, and if you wait till filing your returns, then you will be charged with late payment, penalties, interest, which could actually snowball into a large payment for you. So you might want to think about it much, much earlier. Coming to things like fixed deposits. So a lot of people do fixed deposits. Now, whether you get paid the interest annually or not, the income is accrued to your account. It's already there in your AS26 statement with the income tax, and you need to pay tax on it, even if you've not got the money in your hand.
Sure, because the bank is only doing a 10% deduction.
Correct.
If I'm right.
And they are doing the TDS for you. So they are anyways paying the government, but the remaining 20% of the tax, is your liability and you must pay it on time. Then talking about somebody who does business or who runs his own professional outfit, for him there are lots of liabilities such as TDS that has to be paid before the 5th of every month, service tax which has to be paid before the 7th of every month, and then you need to pay your VAT and you need to pay your advance taxes. So there are lots of milestones throughout the year that you need to do. You need to file quarterly returns for depending on the size of the business and the kind of business that you're doing. So if you can just write down all these things, what is going to happen in which month, whether it's in your diary or it's in your phone or it's in your Google Sheet or whatever it be, as long as it's written down, it will remind you and you will be able to comply with all the possible compliances that you need to do while you're managing your finances.
Okay, so plan, think, write down stuff. I guess there's no shortcut to some of these things. All right. We'll take a quick break, and on the other side, we'll have Karthik answering some of your questions.